Let's dive into the world of commodities for a moment now. Coffee futures have gone back over the $250 mark in trading on the 15th of February, taking their year-to-date rise to around 11% at the moment. Now, remember, this adds on to the 67% rise in coffee futures last year. Comparatively, that was even more than what we saw in oil. Brent crude futures ended the year 55% higher. Now, these levels, coffee prices have effectively hit decade highs, driven there by a combination of factors, including adverse weather in the world's biggest producer of coffee, that's Brazil. Drought and frosts have decimated yields over there, and those have been made even worse by scarcity in shipping capacity and containers needed to move the beans from the farms to bulk buyers. So ultimately, where does this leave large African producers like Uganda and Ethiopia, or specialty ones like Kenya? And how are roasters and restaurants coping with this double-digit price hike? I explore that with Ritesh Doshi, the CEO of Spring Valley Coffee.
My guess, and I guess what the traders are telling me, is that we don't expect them to go up significantly. We believe that they've reached their peak, and we've locked in our contracts for the next 18 months. We believe that prices will stay or hover around this mark for the next 18, possibly 24 months, as supply comes back. What's also happened, obviously, as prices have gone up, demand has dropped a little bit, so you'll start to ease off a little bit. You're seeing it in Brazil already. There's a bit of easing off because prices have gone up so much.
When you say that you expect prices to remain where they are at the moment, that we're more or less close to the peak, what informs that assessment? Why have prices hit their peak?
I personally think that, the futures have priced in what's happened in Brazil. The futures priced in what happened, in Vietnam this time last year. That's already been priced in. So I don't see those futures prices rising unless we have another catastrophic event on either side of the world. I think it's been priced in. And the traders are looking at that. They know what the shortage is in the market. We spoke about that a little bit last time. It's been priced in.
Okay, so looking at that 14-month window between the start of 2021 to date, that 70% plus rise in prices, if we try and drill that out and split out the factors that have driven us to that point, how much of that can we attribute to the drought conditions that we're seeing in the big producers, and how much of that can we attribute to the logistical problems that we've seen just affecting virtually everything from microchips to furniture?
So I think rather than drought, I mean, you look what happened in Brazil. That was a frost. So again, the other end of the extreme of what's happening in our environment, and that destroyed, 6 million, kgs of coffee. I mean, that was a huge impact, and that's what's driven up prices significantly, in the last kind of 6 months or 9 months. And I think that will continue. I think drought will have a bit more of an impact, especially in this part of the world. Logistics, it's raised the cost of a container. I mean, getting a container from here to, let's say, the global north, and what those prices were, pre-logistical challenges today, in some cases are double, and only compounded by places because you can't get empty containers back. So logistical prices, if I was to warrant to we're not a green coffee trader, we add value to everything that we touch, so I can't comment in terms of what the breakdown is. I would guess that rising prices are probably 3/4 of that, and rising logistical costs are 25% of that.
Okay, so when it comes to businesses like yours, where you're situated, because you're sort of the middleman between farmers on one end and consumers like us on the other end, if your input costs have gone up by over 70%, how much of that can you pass on to us?
Really good question. It's funny. We raised our prices about a year ago, even before Brazil was in the picture, and that was because of kind of the spike that happened that we witnessed when Vietnam had some challenges last year. I can only speak for a business like ours. Our market's sensitive. Consumers are price sensitive. Our brand, we are the most expensive coffee on the shelf, the most expensive coffee in a coffee shop. The minute you cross that 300 shilling mark psychologically, customers are put off. Whereas I look at something like Brazil. Prices have gone up approximately 20% across the board in Brazil, and you've seen corresponding demand come down. Now, Brazil has a huge coffee drinking culture, so they'll weather that. If we raise prices here and raise them significantly, Kenya's kind of, just growing burgeoning coffee seed will get hit, and consumers will be affected, and consumers will buy less coffee. I mean, I think it could have a huge impact. And also, customers here are just very sensitive. To answer your question, we had a slight increase. I think we had a 12 and a 15% price increase on our bags. We absorbed some of that. We had about a 25 to 30% price increase on our beverages. I don't think I would love to do it again, so that some of our products are hitting single-digit margins. But we need to weather the storm because this market is sensitive. Consumers are sensitive. Retailers are sensitive. and there just isn't much room to play for someone like us. But we've seen prices grow and go up in the global north, in Europe, in North America, and even in other emerging markets like Brazil.